What up, guys, and welcome to the coffee shop. I'm going to show you a little something that you can do with one indicator and maybe two indicators. And both of them, they're not mine, and the indicators don't really belong to anyone else. They are free indicators. You can just put one on your chart and just change its settings every once in a while. What I'm going to show you today is I'm going to show you range trading with a moving average. How about that? How about you just have one moving average on your chart and you can figure out ways to range trade or trade between premium and discount zones. You can actually mark them out with the moving average. So I like to do this with two moving averages, especially when I get into a base or every time I get into a base area on the market. Now, let me just explain real quick what a base area is. In the market, you can have two different things. You can have a rally, base, rally. Okay. Now the base is going to be this area here, right? And it's not always like that shape. Sometimes it's more like this. It's kind of a flat area. So it's a rally, a base, and a rally. You don't know that it's going to rally. You just know that you have a base, which could turn into a reversal, or it just turns into a super flat market and finally goes either up or down. You just don't know what it's called. The base is not called a base until the rally or the drop takes place, right? Now, the drop, I should say, it's called a drop base drop. Now, if you can see, like, the base is not always like this. It's not up. Sometimes it just slows down and it's still a downtrend. It's just a smoother downtrend. And then it's a nice big drop again. So the same thing can happen for a rally base rally, right? You can have a slight incline or a slight decline. It doesn't really matter. It's always going to be much different than the rallies themselves or the drops themselves. All right, so what we're talking about today is how to trade this little section here. So let's get into that, right? And you're going to do this with just the moving average. Now you can see here with this nice long ranging market, but there is a way to see how to trade this market and where your support and resistance zones are within that market. You don't need all these complicated indicators to do it. You don't have to hire somebody to do that for you. You don't need all that stuff, okay? You don't need SMC or ICT, all that stuff. You simply need a moving average and the box tool that exists in TradingView. So let's get into how this works. We're going to go to the replay here. I'm going to kind of set this. I'm not going to do a replay. I want you to see the whole thing. Okay. Here we go. So you can see that we get this little area here where it's a nice rally, small one. It could be a small one. It could be this big one right here. Doesn't really matter, right? Matter of fact, here, I'll show you how to tell that you can't take a trade, right? Because just because it's taking place, there's going to be a zone of support and resistance that's drawn out. And it's basically telling you that you do not have a trade. You have to wait for a new zone to form. Okay. So I want you to see what that's like. Just because you see a zone doesn't mean you trade that zone. I want you to see the zones that you do not trade. Okay. Nice, strong movement here. And you're staying away from the moving average, right? So what you're going to do here is, it sounds backwards, but you need to do this. When you have a strong move where price is staying clearly above your moving averages, let's put the moving average on a chart. I'm going to type in simple. Okay, simple. We're going with the moving average, simple moving averages, right? Moving average simple. We're going to add that to your chart. I'm going to go into the settings on mine, and you can set yours for whatever you like. I'm choosing a slightly higher length than I normally would for my short term, right? For my short term, I choose a 14, and then for the longer term, I choose a 28 and then a 50 and so on and so on. But in this case, I'm just using 28 so you can see the movements. I'm on a 15-minute chart, right? So I'm going to use 28. You don't have to use 28. Use whatever you like, but it has to be longer than the fast moving average that you would choose, okay? I like doubling mine. So we got a 28. I made mine yellow. We're good. So you can see prices staying away from the average 28 period closes. This moving average, what a moving average does is it tells you on average over the last 28 bars, if they average out the closing price, this is that value, okay? According to this bar, this is the value. So you are closing above the average price, which means you are closing with a lot of support, okay? As long as you are above that average price, you are closing with a lot of support. Then all of a sudden, you start closing below the average. So you have now broken the average. And this is where things start to get interesting. When you pull back to your moving average, because a moving average is late, but it left breadcrumbs in the market to tell you what it's looking for, okay? It left breadcrumbs in the market. What you're looking for is a couple of things. Take your box tool, right? And you cross down below your moving average. Let the moving average start to fall, okay? You crossed below, wait for it to start to fall if you crossed below it. Mark the high of the moving average and the low of the moving average. If your current price is still inside this zone, you only trade inside that zone. And you take a sell position from the top of this zone only if the moving average is falling, and you trade down to the bottom. You only take a buy position if you come back in through the bottom, right? If you come in through the bottom, right? Only if the moving average is rising. You cannot take the buy signal if the moving average is still falling. And that happens right here. So I'll leave this one here. Here's your previous low. Here's your previous high, okay? And now you can see easily, you can see that the moving average is starting to fall here. You can easily sell from this point down to this point. You can see what happens. It actually stops right at that level. This level was the average closing price, not the average close, not the low, not the average pivot, none of that stuff, okay? What this was the average closing price. They were able to get back down to that level. Now, you can see a couple of candles later, you come back up into that zone, and people will normally start trading long, and they'll say, okay, I see the zone, I'm going to trade back to a swing high. Where's my swing high? It's way up here. You can't do that. Don't do that, okay? There's a reason you can't do that. The moving average is still falling. So this is falling. You only take sells, you only take sell positions from the top when the moving average is falling. Right now, you're waiting for the moving average to start rising or falling, and you have to break back inside. But primarily, what you want to wait for is a new curve in the moving average to form, right? So that means all of this is not tradable yet. You can't do anything yet. So let me grab the box, slide out with price, right? There's no moves to make. You made this nice move down, and you saved yourself from making a bad move going back up, right? So now you have a new low down here, right? Here's a bottom right there on that candle. It curves up just a little bit. The moving average curves up right here. So I'm going to take this, move it to the bottom. You still have this top, okay? Here we go. Let's just kind of drag this back here now. Okay, so all I'm doing is always using the last two curves, right? Price came back in above the moving average. The moving average is curving up. So this is my bottom. This is the top of the moving average, okay? So I can only trade long to this point as long as the moving average is rising. Now here's the kicker. You can only take long trades when you have higher lows and higher highs. You can only take short trades when you have lower highs and lower lows, right? Okay, so primarily in this market, what I'm seeing is that I have lower highs and lower lows. We're talking about being right here right now, right? Where's my marker? We're talking about being right here right now, okay? And I want to look to take a long trade at this point. Well, this is probably a bad idea, okay? Because all I have right now is lower highs and lower lows. Somewhere the moving average is making a new curve down. Somewhere it's doing that, allegedly. So we don't know that yet because price hasn't played out. So you have a high and a low, and we've already marked that right there, okay? Moving average is curving up, but then you can see it actually starts to curve right back down again. If I zoom this out, okay? So if it curves up and then curves down again, what does that mean? You have a new high and a new low on your moving average, here to here. It's just a little one. That's it, just a small one. Now, this is the type of zone that you cannot trade. But what you can do is you can use this as a trigger, okay? When the zone is too small, it becomes a trigger point, right? It's kind of like looking at an order block because it's the average closing price from the past. And like I said, the moving average is always leaving breadcrumbs behind for you to follow in the future. This is the average closing price, which means it was good to get to that price in the past, and they'll be targeting that price in the future. So this is so small that it becomes a good price. What you're doing now is you can see that your moving average curves up here. You've broken above this little trigger, And you need to get a higher high. No problem. You also need a higher low. Okay, here's your new low. Here's your previous low. You just made this high, and it's higher than that high. I would opt for a second high. That way I have a higher one, right? There you go. You're still above the trigger. The moving average starts to curve up, and you have your long positions now that you can take. So this saves you from making a bad trade and getting stopped out, right? So we were able to catch this move down here to the bottom, right? We were able to not take the long trade. Where was it? There was a long trade that was taking place here. We were able to stay away from this long trade and end up getting stopped out down here. Because if we took a long trade, right, we would have been like this. Here's the swing low, right? We probably would have gone back to, I don't know, the moving average, let's say, but you would have been stopped out before you got there. Why? Because the moving average is still falling. You don't want to take that trade. You want higher lows, higher highs, and you have to either break above your trigger. The moving average has to be curving in one direction, the direction that you want, and you have to be either inside the zone and you only trade in that zone, or you have to be clear of the zone and trading out of that zone. No problem. If I leave this high here and this high here, I also have a new low. I'll just bring this down to the low. Why not? There we go. Let's bring that down to the low. I don't have anything else to work with here. There's a previous. Nope, there's nothing previous here. And I'm just working off the moving average. So now if I drag this out, right, and we were saying that basically we can enter a long trade, let's just say somewhere around here, and go back to the top of our zone, right? You take that. Where's your swing low? Well, it's below your moving average. It's below your trigger. It's below everything else. This becomes more than a 1 to 1.5. This becomes a 1 to 1.8, right? Enter your trade, and you can scalp your way up and down all the way, right? You can see your moving average is constantly rising the entire time. So you're always looking for these longs. You don't have any true dips down that curve up. This is the only curve up, right? See, this is the low point. This is the only low point. Everything else is not a low point. You simply have these moves down. Up here's a low point right here, just a small one. Right there, another little trigger point because it's really, really tiny right there. So what happens when you start crossing over the moving average? In this area, right? You want to get, well, here's the bottom of your zone. You don't have another zone. You're simply getting into the same level. I don't see anything that tells me that I don't have an uptrend here. I still have higher lows the entire time, right? The whole time is higher lows and higher highs all the way through. And this trade ends up taking you all the way out to here. And that is it's almost a 1%. And that's really, really good. Like to enter a trade here, know that you're going to get out with 0.9% on your move without getting hit on your stop loss. Set it, forget it, walk away, set your money, set your take profit, and you're done for the day. So again, real quick, you're looking for the curves up and the curves down, right? It curved up, it curved down, just marking out a different one, okay? So you don't want to be down here, but you can trade down to the bottom only if you come down through the top and the moving average is falling, right? Now, add to that, you need to have lower highs and lower lows. Here, you curve down, but you have higher highs and higher lows. So you're not taking a short, right? So then the moving average starts curving back up and it breaks back above this zone. You don't have anything else above you other than the previous zone, right? And you can trade all the way up to the top of that zone. The moving average is telling you which way to go. Just pay attention to it. Stop looking for moving average crossovers. Stop looking for the magic golden moving average that has some like trend indication thing on it with a buy sell thing. You don't need that. It's a moving average. It's telling you everything you need to know. Any questions, go ahead and ask it down on the bottom. But primarily, I hope you guys join the website because that is where all of the strategies and everything's are really, really taking place. See you all next time at the coffee shop. Peace out.